So these countries that want to do less business in dollars are having a hard time doing that. But what they can do is buy gold as fast as they want to. And that's what they are doing, because gold in a vault can't be sanctioned. And over the last 10 years, central banks have been buying about 500 tons of gold a year. In the last 2 years, they've doubled that to over 1,000 tons. And this, to me, is really material at the margin. And I do think that this is what's helping to drive this gold market higher and what has caught the experts off guard.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, our good friend Dana Samuelson is with us from American Gold Exchange. You find him at amergold.com. And hey, if you got a question, comment, or you got something you'd like to share, just shoot me an email, kl@kerrylutz.com. Dana, it's great to have you back on the show. I wish I could say a lot happened between now and the last time you were on, but not a whole heck of a lot. It's we're back to the normal precious metal markets, where pretty much you're watching paint dry.
Well, nothing's really normal these days, Kerry, but yeah, we're in a consolidation phase where things are a little quiet after a really exciting March and April into May for precious metals.
Right. So is this just a little reprise, a little pit stop along the way to 5,000? What's your take here?
Oh, I think that gold, the fundamentals that are driving gold, there's a lot of them that are all in place at the same time right now, which is unusual. And I do think we're going to see gold go substantially higher over time. And a double from here is entirely likely over the next couple of years. I'm targeting right now 2,750 to 3,000 over the next 12 to 24 months myself.
Hey, well, you know, like when you see the headlines on the mainstream financial news, they always say experts surprised about gold's sudden increase. You know, the experts are always taken by surprise. If they're such experts, why are they surprised at anything?
Correct. Well, markets make moves you don't expect sometimes. But as I said earlier, we've got a lot of drivers all in place at the same time. Fundamentally, you've got debt, which is just ever increasing, especially in the U.S., and that's the main big picture driver over the last 20 years. Now we've got two wars going on, so gold climbs a wall of worry, and it happened to peak coincidentally or not coincidentally, with Iran and Israel exchanging direct shots for the first time ever in April. Thank God we walked back from that a bit. You've got the potential for a U.S. recession, and falling treasury yields and falling interest rates, and perhaps some more economic stimulus, which I think could give the gold market a real big tailwind if and when that occurs. And I do think a recession is in the cards for the U.S. Consumer spending is 70% of the economy, and the consumer is pretty stretched out right now with record debt and record low savings. And who else? Who knows what other wild cards might be out there right now?
And that's and everything you mentioned there, none of that really qualifies as a black swan here. Imagine if a black swan gets mixed into the equation, huh?
Exactly, but it's unusual to see all of these things coming together at the same time in the same place. And I didn't even mention record central bank gold buying. You know, central banks have doubled their gold buying over the last 2 years. They want to get out of the dollar. The countries that are afraid of being sanctioned by the U.S., like we sanctioned Russia after they invaded the Ukraine. So there's this big de-dollarization movement, but practically it can't really happen because there's no viable alternative to the dollar. The dollar's entrenched in the financial system. So these countries that want to do less business in dollars are having a hard time doing that. But what they can do is buy gold as fast as they want to. And that's what they are doing, because gold in a vault can't be sanctioned. And over the last 10 years, central banks have been buying about 500 tons of gold a year. In the last 2 years, they've doubled that to over 1,000 tons. And this, to me, is really material at the margin. And I do think that this is what's helping to drive this gold market higher and what has caught the experts off guard.
Yeah, so gold in a vault can't be sanctioned. And that's another kind of way of just saying that there's no counterparty risk here.
Exactly. That's gold's greatest attribute. It's got no counterparty risk.
So you think it's a bargain here at 23.20 and change?
Well, I do think that we are in a bull market that's going to continue, and it's a little hard to wrap your head around buying something at an all-time high. But when you think the market's just going to keep going higher, and I do believe it's a good deal, especially at around 2,300. If we get a little cheaper, I think there'll be a lot of buying coming in at the first, if the numbers are 2,200 something. I do think silver, I do like silver better as an investment at these levels because gold is about 15% above its previous all-time high in 2011, while silver's about 30% still under its previous two all-time highs of right around $50 an ounce and about $29.50 today. So silver to me seems to be the better value because silver lags and then plays catch-up. And when it plays catch-up, it tends to do so with a vengeance. And we've seen that a couple times over the last 4 or 5 years. And it's trying, but right now, just it's in a bit of a consolidation phase, just like gold is.
How far do you think silver can go?
Oh, I think silver could easily get over $40. In fact, at this gold price, I'm surprised silver isn't already over $40. I think 40 to 45 is a range I'm targeting in my own mind.
So you're thinking triple digits here?
I do think $60 to $75 silver is entirely possible. Triple digits is a bit of a stretch for me. I don't like to look too far over the horizon because things can change. But I do think, $100 silver is entirely possible given enough time.
Really? $100. Yeah, well, it could go even higher than that, right? I mean, when you start thinking about what's in the ground and the fact that, we're in silver deficit now, right?
Right. Yeah. For the last 2 years, we've been in a fundamental supply deficit where the world's consuming more silver than it's mining. And there's a lot of silver use in EVs, solar panels. So that demand factor is likely to increase. And silver's not really an economical metal to mine. It usually comes as a byproduct of other metals, as far as I remember, if I remember correctly. So I do think silver is a better play.
Yeah.
Around $30 an ounce, that's a great deal right now.
Usually it's a byproduct of copper and other base metals, of course. Certain countries like Mexico, Peru, a few others, there's a few pure silver mines still kicking around. There's a few under development out there. But like you say, generally not that economical unless you're talking about bonanza grades, like kilo per ton silver. Then it becomes very economical. Some of the largest silver mines in the U.S. have been shut down over the years for that very reason. So going to be interesting to see if silver rises again. Certainly at $100 an ounce, it becomes very economical to produce.
Right. We'll see some a lot greater exploration if the number gets that high.
All right. So when we're looking at how you buy it, what's your favorite means of buying it? I mean, I know that depends upon your particular circumstances, but somebody just getting into it, Joe Sixpack, for instance.
I'm a physical precious metals dealer. National Physical Precious Metals Mail Order Company is my business. So we deal in the sovereign minted 1 ounce coins, which are really just round bars made by the U.S. Mint, Canadian Mint, Austrian Mint. Those are the big three, both in 1 ounce gold and 1 ounce silver. I call them vanilla, chocolate, and strawberry, simply because they're most widely traded, competitively priced, and easiest to sell when you want to sell what you've already purchased. I favor the U.S. Mint products over the Canadian and the Austrian, but we've had situations over the last few years when demand has been really strong and the U.S. Mint cannot keep pace with demand. So we've seen premiums higher for U.S. ounces of gold and silver, U.S. Eagles, than we have for Maple Leafs and Philharmonics. When that's the case, I say buy the cheaper of the three alternatives. That's what I truly like the most.
So, there's a lot of fake stuff out there, fake gold, counterfeit bars, counterfeit rounds, and same with silver. I've even heard recently some of them popping up. It's the best way to avoid fakes.
Deal with a long-standing dealer who's been in business for decades. I'm an old-timer. Deal with someone who's got a lot of experience. Do not buy on auction online platforms or through private chat groups. That's really where most of the trouble is. I'm a member of the Professional Numismatists Guild, which is the leading organization of rare coin dealers in the country. In fact, I was president of the Professional Numismatists Guild when this Chinese counterfeiting problem came to light, and I helped to conceive of and establish the industry anti-counterfeiting task force that today works with Homeland Security and Secret Service to interdict shipments of fake precious metals items coming in from China. A real dealer that really knows what he's doing can spot fakes a mile away. They're so far different than the sovereign minted products. It's easy for us to see the difference. But if you're not used to looking at these metals, you could be fooled. And this is why I don't really recommend refinery-made bars, 1 ounce gold bars or silver 1 ounce bars in particular. Primarily gold bars, actually, because the Chinese can replicate those more readily. The designs are less intricate, and they're easier for the Chinese to pass off a bad tungsten core bar plated by gold. The sovereign mints have added tiny little minute design elements into their striking features of the coins to make it harder for the Chinese to knock them off, to replicate them. So the sovereign mints are trying to defend their own product.
Yeah. So what if somebody comes to you with some rounds, say some silver rounds? I've heard even that they're replicating the weight now almost precisely on these fakes.
Right. We have ways of testing them to make sure they're real silver. We have density measuring devices. There's a couple other little tricks that we have. One thing is sound. When I go through inventory that I have not sold, that I'm buying from someone, these coins that are pure silver have a very specific ring to them.
Ping.
And I can hear it. Can literally hear it when they hit each other.
The ping test, yeah.
Yeah, well, it's just ding, ding, ding versus thunk, thunk, thunk.
Yeah. So what about those guns, those X-ray guns? Those are good?
Yeah, XRF guns are good, but they're cost prohibitive. They cost about $20,000, and they're a bit of overkill unless you're doing a lot of buying of metal that you really don't know what it is. Purity-wise, like jewelry, other things. But they're good for testing for fakes as well.
And scanners, too? Any scanners you like out there?
Well, there's one device that we use as an industry called the Sigma, SYGMA. Right. Yeah, we use the Sigma device mostly. And a lot of it's just looking at coins and knowing I've seen hundreds and thousands and millions of ounces of gold and silver. So I just know what the various mints products look like, sound like.
Feel like.
Yeah, feel like, too.
And it's kind of like a bank teller when they get those counterfeit bills. They feel so many, like you say, millions of dollars of currency going through their hands, and then it just hits their fingertips, and they just instantly know. So that expertise is a good reason to buy from a accredited, acknowledged source like yourself.
Right. And there's a lot of good dealers around the country in the U.S. that are P&G members, Professional Numismatists Guild members. We tend to be the leaders in the industry with the most experience.
Yeah, I bought from you many, many years ago. I haven't bought metals much in the recent years. No need to, but, I bought from you probably back around 2008 or 9, 10 in that area. So very happy with the service. Hey, just tell us, Dana, where we find you, how we connect with you on the web, find out more about your company.
So again, we're American Gold Exchange. We're based in Austin, Texas. We're in our 26th year this year. Website is amergold.com. People can email us at info at amergold.com. Phone number is 800-613-9323 if you'd like to give us a call.
All right. Excellent. Hey, really appreciate you coming on, Dana, again, and talking about this. I think a lot of valuable info there. If you got a question for Dana or myself, shoot me an email, kl@kerrylutz.com. The link to Dana's site's in the show notes of this interview on financialsurvivalnetwork.com. And while you're there, please sign up for our free newsletter. Dana, always a pleasure. Thanks for the info.
Thank you, Kerry. Great to see you again.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.